being. Let's put the spotlight on the defense space because we've seen a big comeback on defense stocks, both on the PSU side as well as several private sector names. We have Upasana joining in. She's mapped the fall, then the recovery that we've seen, and of course the earnings and what these companies are saying. Upasana, tell us more.
Well, certainly, defense sector remains in focus today after the stocks have seen a good rally after a steep correction. Now, let us look at the valuation of these stocks and fall from the recent highs. First up is Bharat Dynamics. The stock is down 41% from its highs, trading at 37.2%, 2 times the one-year forward PE, followed by BEL, which is down about 26%, trading at 33.1 times. BEML is the next one, which is down about 52%, trading around 25.2 times. Cochin Shipyard is also down about 56%, trading at 27.6 times. Next up is HAL, which is down about 41%, trading somewhere around 26.1 times, followed by Mazgaon Dock, which is down about 27%, trading around 24.5 times. Zentech is also down nearly about 60% after the stock remained in focus after its Q3 results, which is currently trading at 24 times. And lastly, Data Patterns is down as high as 58%, down 32.5 times. Now let us look at how these companies have performed in their Q3, and the common trend seen is their revenue growth was really good for these companies on the back of strong execution. But margins of these companies were under pressure, but the companies have retained to their FY25 guidance. Now, Bharat Dynamics numbers were above estimates, but there was a big miss on the margin front. Coming to BEL, the company's revenue saw a strong uptick of 39%. Margins were also up 330 basis points at 28.7%, and company has also retained its EBITDA margin guidance between 23 to 25%. BEML, the company is confident of achieving its revenue growth in FY25 despite seeing a revenue downtick of 16%. Cochin Shipyard, the numbers were overall weak. This was mainly dragged by company's key segment, that is shipbuilding segment. Revenue was up 7%, margins were down 870 basis points. Next up is HAL. The revenue saw an uptick of 15%, margins were up 40 basis points. Now, margins were lower due to execution challenges is what company has indicated. Zentech revenue has seen an uptick of 53%. Margin saw a downtick of as high as 1,400 basis points. And company says that it is on track to meet its revenue guidance of 900 crores for FY25. And lastly, Data Patterns. Revenue has seen a downtick of 16%. Margins stood up 320 basis points at 46.2%, and company sticks to its FY25 revenue guidance of 20 to 25% and EBITDA margin guidance of 35 to 40%. So all in all, defense sector remains in focus, and the commentary from these companies after their results also remains quite upbeat, sticking to their FY25 guidance.
Okay, all right. Thanks a lot for that.